Good morning, everyone. I hope that you are doing well. Welcome to today's new lecture of the Uncensored series. Here we're on the hourly chart of NQ, and as you can see, NQ is currently being repriced towards the upside aggressively. On Sunday, we saw the market displace below this BC right here, creating this CB. As outlined within the market updates channel, as long as price does not displace above this CB and utilize this support on price, this repricing higher to me feels like manipulation. Therefore, I will be monitoring the reaction to the London high, which formed right here, to see if we're going to reject that to then draw towards sell-side liquidity next. It's currently NFP week, and to me, right now, as long as we do not displace above this CB, I'm anticipating lower prices for NQ. Meaning I will be anticipating the market to draw towards sell-side liquidity resting below this low right now, and eventually even lower towards this low and towards previous week's low. So let's take a look at the 15-minute chart, and as you can see, the market has now repriced above that London high as outlined, and this occurred during the 9:30 repricing higher. Therefore, who has been making money since the 9:30 opening? Everyone who is currently in a long position is experiencing unrealized profits. So therefore, everyone that is having this idea of, okay, when the market is bullish, we should be buying, look, they're trapping people into believing higher prices are next now. Meaning what they're doing is they're engineering a lot of sell-side liquidity. People are going long right now, market going above this high right here, because they think, oh, it's going to expand aggressively now, it's going to fly to the moon, and if I'm not on board, then I'm going to miss out on generational wealth, etc. And by running above that high, what they do is they take out all of the buy-side liquidity which was resting above that high. Therefore, to me, this is very suspicious, and I'm going to look for the market to form a high in this area to then draw towards the downside. Now, if we go into the 1 minute time frame, what I will be looking for is the following. I'll be looking for the market to form a high in this area to then begin to draw towards the downside. Right here. What I want you to see is that at 9:30 we open up, drop lower initially, form this low, and then slam towards the upside. That right there is a key algorithmic signature. And what's interesting to me is the following. If we pay attention to ES, what I need you to see on ES is that ES never took out those highs. Meaning there's a big correlation between NQ and ES. Therefore, we can anticipate the run higher on Nasdaq to be manipulation. And based on my hard time frame analysis, I'm more interested in shorting NQ than shorting ES for your info. So at this point, we're simply going to wait. We're going to see whether or not a high will form, in fact, above that London high. So I'm just going to extend this line to the right. You know what? Sometimes I'm a bit picky when it comes to my annotations and such. Going to do is we're just going to make a red line, signaling that is that key buy-side liquidity pool which has been taken out. So now we're waiting and seeing. What I want you to see is that between 8:30 to 10, the market has done nothing but reprice higher, meaning it has run up higher quickly, as you can see. Who has been making money all throughout that window of time? Buyers, of course. Now let's zoom into the previous 90-minute cycle from 7 to 8:30. What you can see is that we initially repriced lower, forming this low here, and from there we begin this repricing towards the upside. Do you see how much back and forth going there is during this whole expansion towards the upside? Do you see how there's a lot of back and forth going here, a lot of back and forth going here, a lot of back and forth going here, and a lot of back and forth going here? Even though the market expanded towards the upside, you can see that there was a lot of consolidation that's taken place. Today, it's the day of Monday inside of NFP week, and therefore, to me, it doesn't make sense for them to have a very large range day. It's possible because we have, of course, high impact news today, especially during the afternoon session where Fed Chair Powell will be speaking. But I mean more so in the sense of, okay, is it logical for them to really all of a sudden begin to expand towards the upside if the underlying order flow has been bearish? I'll be very surprised to see that to be the case, and therefore I'm simply waiting and seeing, okay, how is this opening range from 9:30 to 10 being established? And so far, I'm waiting for that high formation. There's SMT relative to ES on these highs here. The highest high formed exactly at 950. So now we're waiting for displacement towards the downside. What to me would be the key algorithmic signature is if we see the following occur. Is if we see NQ trade back below this blue line here, which is of course the higher end of that CB, which I have outlined. So that is there what I want to see. If we drop into the 15-second time from now, I will be looking for a retracement take place. Preferably I want to see it retrace into this low. If it doesn't retrace into this low, then we need to wait for a bigger retracement to take place. But if we create a CB now and retrace into that CB, it's something I would really like to see to go short. Focus on this CB. Notice that this CB formed inside the price range of this larger BC right here on the left. Take out sell side liquidity here. If we're going to retrace, it will originate from the sell side liquidity pool. Meaning, take out sell side liquidity, retrace, offer the shorting opportunity, and then begin to roll over. If we do not retrace that deeply, and we simply see the market continue to roll over, then I will have to go market short inside of this area. And that would mean my stop would have to be a bit bigger than usual, but it would still allow for a good run lower since the overall analysis is lower prices. So come into that price range. There we go, short. So 6 contracts short on NQ. Stop is above the high, which we just took out. And we're anticipating lower price to be the draw. First target will be the sell side liquidity resting below the 930 open price. But you know what? Let's actually aim just for the 930 open price initially. It's already more than enough. So let's go into the 50-second time frame. And let's investigate the delivery that's about to come. What I want you to see is that the reason why this high formation at 950 is important is because we took out buy side liquidity resting above this high here. And if you pay attention to the timing at which that high formed, you can see that that high formed between 940 to 950. And here comes the thing with regards to these 90-minute cycles and these 30-minute cycles and these 10-minute cycles as I've been teaching them to you. What you need to understand, guys, is that when it comes to these time cycles, what's very important to know is that we can fractalize them, meaning we are currently within the second 90-minute cycle of the morning session from 8:30 to 10. Inside of this cycle, we can divide that cycle into 3 30-minute cycles, meaning we have a cycle from 8:30 to 9, from 9 to 9:30, and from 9:30 to 10. Therefore, what you need to understand is that because of the fact that we're currently trading inside of the cycle from 9:30 to 10, which is the first 30 minutes of trading on the regular trading hours, what we can anticipate is that within that window of time, significant price action will follow. And that is what we're currently seeing. If you fractalize that 30-minute cycle into 10-minute cycles, what you will get is 9:30 to 9:40, 9:40 to 9:50, and 9:50 to 10. And in this case, what you can see clearly is that at 9:50, we open up, reprice above the high which formed between 9:40 to 9:50, take out that previous 10-minute cycle high, and then begin to reject it. And then begin to show the signatures of wanting to roll over. And that is what you can see here. Pay attention to this low right here. We just traded into it and then we formed relatively equal lows. I bet that if we zoom out to a bigger time frame, that this is an imbalance. And let's see if they're going to slam it lower after this. What I like about this delivery so far, ever since the 9:30 open, is that what you can see here is that around that 9:30 open, we have an imbalance which formed here, a sequence of imbalances. So therefore, I'm monitoring to see whether or not we're going to slam through this price range of that blue box. That blue box being that old imbalance based on the hourly chart, which I told you to monitor. I'm monitoring ES at the same time as well. All right, I'm taking a partial here at the 10 o'clock open, just to secure some profits. I know I said I would initially partial at 9:30, at the 9:30 open. But I'm just looking at the M5 chart, and what I can see on that M5 chart is that I see a variation of the market structure shift pattern. So I'm just going to play it safe here, and I'm going to secure some profits already. Let me just turn the executions on. So what I'm now monitoring is whether or not we are going to see the market begin to reprice towards that 9:30 open price significantly. I want to see it really displace below this blue line right here, which is the low of that hourly CB, which I had annotated and which I broke down for you. Because if we do not displace below that price range, what could occur is the following. What could occur then is that my analysis of a bearish day is off. And then we're likely going to see the market continue to expand towards the upside. This high formation here is of course very slow. So if that is the case, then it is what it is. But at this stage, I'm just going to monitor and see. I'm going to hold on to the initial idea, of course, until proven otherwise. And that is what you will see as well. But let's see how they're going to react to these ranges here. And guys, that's a takeaway that I want you to gain from this. And that's the following. Look, when you have a certain plan, when you have a certain idea, pay attention to this CB, by the way. I'm going to annotate for you. I don't know why this is extended to the right. I was having some issues with TradingView earlier this morning when I did my pre-market analysis. So I couldn't draw lines properly. So I used the boxes instead. But pay attention to the CB here. Ideally, I don't want to see the market displace above that price range. But what I wanted to say was the following. When you have an analysis that you make, when it comes to your anticipation for how a trade is likely going to deliver or how a setup is likely going to deliver, what you need to understand is that when you have an idea of, okay, these are the levels I'm going to target, these are the levels I'm going to aim to reach, so to say, this is my idea. When the market, oh yeah, good idea, yes, okay, that's no worries. I'm just looking at ES as well on the other screens, and I'm happy with the fact that I partialed, but let me explain. What I want you to understand, guys, is that I said to you 9:30 open price is going to be my first partial. But because we reached the lower end of that early BC, this blue box here, and the lower end of that early CB at around 10 o'clock, to me, that was already a sign, okay, it's not a bad idea to take a partial here. Because if my analysis is off, if my idea is off, and we're not going to expand towards the downside today, then what will occur is the following. The market will form a low in this area and then begin to draw towards the buy side liquidity resting above these highs. And then I read the market wrongly. Because I know that that's a possibility there, what I do is I at least take a few contracts off to mitigate the commission and to be sure that I know that when I end this position and when I close it, then I know, okay, I will not regret not having taken a partial. Guys, when you recognize signs of something that you're not a fan of, always take a partial. You can't go broke taking partials. And that's something I want you to understand. Let's monitor the direction now to this low here. Like I outlined, so far direction to this CB is very well. Look how the wick went above it here, but notice how the body's kept on closing inside of it. What I will be monitoring is whether or not the market will displace below the lower end of this CB, this blue line right here. Pay attention to that. New CB has been created here. What I don't like is that ES is not really following along with Nasdaq just yet. I really need to see ES also begin to slam towards the downside. And that's the thing, guys. When you have an idea, when you know what you're looking for, when it comes to the delivery of price, you always need to keep an open mind, so to say. We don't try to, I would say, how do I describe it in the best way? If we displace above this high, by the way, I'm going to take another contract off. But so far, NQ is delivering around that lower end of that CB. And we see the market begin to trade below it. I need to see ES catch up to it as well, because ES is not trading below this low just yet. So that could be a warning sign for me. That's why I said if we displace above this high, I'm taking, let's say, 2 more contracts off, yes. But when it comes to your perception about the market, it's very important that you don't try to hold on to one-sided ideas for too long. What you need to do is you need to pay attention to the reactions from specific levels. The reactions to those specific levels will be very telling to you moving forward. And here we're going to likely take 2 more contracts off if the market displaces above that high. Displacement to me would be a strong closure above it, and the next candle would have to reprice into it. It's allowed to tap above it like it just did here, because on a 1-minute chart, that high is actually the low of a 1-minute CB. Therefore, if we just trade above it, take out the buy side liquidity resting above this high, then it is eye of fat taking place on that 1-minute chart, where we take out buy side liquidity and then immediately begin to slam towards the downside. That is what I need to see now, and that's what we're seeing beautifully. Come to that 9:30 open price. And there we have it. Next partial. And at this stage, the market really should not begin to displace towards the upside, so the stop can be trailed. But what's very important to understand, guys, is that we have an open mind. We try to, how do I describe it in the best way? I'm trying to find the right words for it, but when I come to the charts, I of course make my analysis. I know what levels I'm monitoring. I know what levels I'm trying to trade off, but I don't say this is what has to happen. When I say, okay, because of my analysis, the market should do this. No, the market is going to do what it's programmed to do, what it's absolutely coded to do. And therefore, what you need to understand is that when it comes to the delivery of price, we can either force our will onto the charts, or we can get in sync with IPDA. And the way we get in sync with IPDA is by following along with the algorithmic signatures that it's showcasing to us. And that is what I want you guys to understand. And that's crucial to understand. And over time, when you get more experience in front of the live charts and utilizing the theory that I share with you, you will come to realize the value of what I just described to you. If we displace above this high, I'm going to take one more contract off because that should not occur if we're going to roll over. Why? Because this high already traded into that 1 minute imbalance like I outlined. We took out buy security resting above this high, and therefore this wick should function as a rejection block on price. We have traded outside of the price range of not only that REBC but also that RECB, so therefore monitor direction to this wick. This is why we partial at 9:30, by the way. ES is still not following along with NQ. So let's see if NQ begins to roll over and if ES will get a sink. It's unfortunate that I can't just showcase ES to you as well, but notice that NQ is now repricing below that 9:30 open price. Let's go to the 1 minute chart quickly. Here on the 1 minute chart, I'm going to take a partial below the low right here. And the reason why I partial below that low is, like I said, ES is not following along with NQ whilst NQ is. Where ES is still trading above the 9:30 open price, NQ is trading below it. So to me, that's a potential warning sign, yes, of this all being manipulation towards the downside. Is it possible that we're still going to draw towards this longer term target, like I outlined for the session? Yes. But to me, I don't want to have to sit through chop. I want to be in the cleanest runs possible. Therefore, that's what I'm monitoring. Pay attention to this imbalance now, right here. I'm going to extend that to the right. And we're going to monitor direction to that imbalance. As long as price does not displace above that imbalance, I anticipate lower prices. But if we see the market displace above that imbalance, that to me is the warning sign to get out. I want to see NQ really find resistance inside of the imbalance right here. This is the first imbalance that formed after the 9:30 open, and therefore I'm paying attention to that imbalance. Why? Because this imbalance right here was not an imbalance to go long off. Surely you could have been profitable if you went long off this area at 9:33 and then took this run higher. But what I mean with this imbalance is the following. This imbalance showcases to me that from 9:30, manipulation took place, like I outlined based on that higher time frame chart. We manipulated towards the upside, trapping people into believing higher prices were next, and what occurred then is the following. We formed that high and we then displaced towards the downside. And that is what I want you to understand, guys. That's the overall framework that we're operating in. But because this imbalance is so large and it's a Monday, what could occur is the following. That we could just chop around inside the price range of this imbalance. I'm going to give it until around 10:30 because if it's going to just chop around and it's just going to distort time because the warning signs are present when it comes to SMT being present now on the lows as on the highs, that to me would not be preferred, and then I would simply cut the recording. This could then turn into a high resistance liquidity run. So let's just discuss some things. Let's just have a nice conversation now that we have one contract left running, and we're just going to monitor how the market is going to react off that imbalance. When it comes to your overall development as a trader, when it comes to your development as a student of mine, what you need to understand, guys, is that first of all, if you're watching this lecture now, it means that you have gone through the model series and that you have gone through everything that I've taught you thus far. What you need to understand is that If you just rushed through all those lectures and you just basically looked at them and you didn't really take the time to think about everything that's shared or backtest everything that is shared, then you're just binge watching everything. Then you're just going through the lectures and you're just trying to finish them all because that is what's going to make you profitable and that is what's going to help you. That's your thought process. But let me tell you something. What you need to do is you need to put in the work yourself. Meaning, what you need to do is you need to go out there, you need to go into the charts and investigate. You need to be the one that takes yourself into the charts every single day, every single week, whether it be backtesting or forward testing, and you practice and you practice and you practice. And over time, things will begin to click and you will begin to see exactly how I'm able to call these moves before they occur, guys. I literally walked you through this whole move before it occurred. I shared with you, we manipulate higher to distribute lower. Guys, you tell me that that is buying or selling pressure that's driving that. You tell me that this retracement, which was called in advance, is just buying pressure for this moment in time, followed by a lot of selling pressure towards the downside. At some point, yes, you need to come to the conclusion that it's absolutely not possible for that to be buying or selling pressure. There's an algorithm in control of the delivery of price. And if you have gone through all my lectures thus far, you have likely seen the algorithmic precision that can be achieved based on time and price. And I'm very grateful for the fact that you are investigating my content. And I'm so proud of you, honestly. Like when I see the DMs of the students that are absolutely crushing it, that are absolutely killing it, and are saying, thank you, Zeus. It makes me very happy because, look guys, it's one thing to do this yourself and to just extract all the money you would ever need from these markets. But it's another thing to also be able to share it with others so that others can also experience the freedom that you get to experience. I'm so proud of you. I'm so proud of each one of you that's going through these lectures and watching them, because I know it has already been like, what is it? 25 minutes, nearly 30 minutes of this recording, of course. Pay attention to the rejection of this red line right here, of that 15-second wick as I outlined. So far, that's looking very good. Look how the bodies are respecting that level. Extending that to the right. ES is slowly also beginning to roll over, but ES is still not trading below the 10 o'clock low, whilst NQ, of course, is, as you can see. So until NQ and ES get in sync with each other, we're likely going to see this drop continue. But anyhow, when it comes to your development as a trader, there are many different phases that you go through. Initially, you go through a phase in which you spend a lot of time in front of the charts, in which it's just you versus you, and you're just collecting data, and you're practicing, and you're putting yourself out there in front of the screens and just going out there and just investigating. You're investigating everything that you're learning. That is where you train your eye. This takes a lot of time and it takes a lot of effort. This is the process where you learn to internalize everything that I'm teaching you. After this process has been done and you know exactly what you look for and you know what algorithmic signatures I'm teaching you, the next step is the following. The next step is switching from historical market data to looking at real market data at the live price action. Don't go out there and try to trade right away with real money. Don't go out there and try to pause a challenge just because you can quickly, just because you need that money. No, go out there and tape read. Meaning go out there and literally record yourself sitting in front of the charts and literally say to yourself, okay, I'm looking for this to occur, then I'm looking for that to occur. This is what invalidates my idea, and this is what I'm looking for to confirm the idea. When you begin to do that, guys, and when you begin to go out there practicing in front of the real charts, what you will come to realize is that the time spent behind the charts relative to that studying phase in which you're just backtesting a lot will be decreased, especially when you begin trading live. I will never tell you when to trade live. I will never tell you to go out there and put real money at risk. Why not? Because I'm not a financial advisor. I am not telling you what to do. I'm literally sharing with you what I see within these markets, and what you decide to do with that information is all up to you as part of our terms of services, which you agreed upon, of course. But what you need to understand, guys, is that the moment that you switch from backtesting to either demo trading or live trading, the chart time that you will experience, the time spent behind the charts, will be decreased. The reason why that chart time will be decreased is because you know exactly when and where the setups will form. You know what key levels they will form from. You know what times those key levels should be reached. And when they get met, you know what you'll be looking for. And guys, that's the beauty of understanding everything I'm teaching you. Some of you are really on the right track with decoding IPDA, and it makes me happy when I see that. So continue studying like this, please. And when you figure this shit out, be responsible with it. And that's my advice. Be responsible with the knowledge that you will have and be caring for those that need you. When you come to this level of understanding, where you're able to see these moves before they occur, week in, week out, day in, day out, and you will gain that level of understanding that I'm trying to teach you. Of course, there are boundaries to what I'm allowed to teach, because there's a certain level of information that's just, it just has to be kept quiet, but I'm trying to teach you as best as I can without getting myself into any trouble. And when I released Tepda on Twitter with Rich the Boom, we got shadow banned. And we saw a lot of crazy things happening when it came to our social media accounts on Twitter, on X. When that occurred, to us, that was a moment of, okay, we have now crossed the boundary, and we now know that when we begin to teach such specific time and price concepts, where we literally share, pay attention to this time-based range in the future, that's where you get yourself into trouble. Meaning, that's where they say, okay, you cannot go any further than this when it comes to sharing what you know or sharing what you're sharing. And therefore, to us, that was the moment, okay, this is like a boundary, and we need to be cautious with going over that boundary. And that's what I mean when I say be responsible with everything that you begin to see in these markets, because there are repeating algorithmic signatures that are absolutely undeniable. They occur week in, week out, and they're so freaking precise. Words can't even describe it. And I feel like actions speak louder than their words, and that's also why I think this lecture series is, of course, such a good series to watch and to investigate. ES is still not following along with NQ, meaning ES has still not taken out that 10 o'clock low. They, in fact, created relatively equal lows relative to that 10 o'clock low, whilst NQ already is, of course, trading deeply below that 10 o'clock low. So we're, in fact, seeing that SMT on both sides of the marketplace. I'm going to trail my stop aggressively. I never want to see the market revisit CE of this large BC again. I don't want to see it displace above the 930 open price. I just want to see it begin to get in sync with ES soon. So at this stage, it's a waiting game. And guys, what I want you to understand as well is that when I view time and price, when I look at these markets, to me, yes, this candle here is very significant. I don't want to see the market displace above this candle. The reason why this candle specifically is because that candle is the low that formed between 10 to 1010. Between 1010 to 1020, we form a higher low, high being here, low being here. Therefore, when we displace below this low, I don't want to see the market displace above this candle's low again. Are you beginning to see what I'm trying to share with you? This is how you can view time cycles within 10-minute cycles. And that's something some of you have already been asking about. And I'm happy to hear that you are investigating so much. And just keep doing what you're doing. So pay attention to the reaction to this upcoast candle here. If the underlying order flow is going to remain bearish, price will never displace above this candle here. Then at inside that range, we have this CB, which formed just below the 930 open price. So it's possible that they want to retrace in that before wanting to continue lower. Let's monitor if they displace below that previous 10-minute cycle low. I want to see ES really catch up to NQ if it's going to draw all the way towards that new morning session low. That's the beauty, guys. Like, monitor the direction to this low now. ES also has to catch up. ES is currently trading near those relative equal lows. I really need to see it displace below that. Until ES displaces below the 930 open price, NQ is being held back, but the moment ES also displaces below the 930 open price, what will occur is that both ES and NASDAQ are in sync with each other. That's when the clean price action will come in. ES just traded below the 10 o'clock low and below the 930 low. I want to see ES begin to accelerate as well. If it occurs, then we're going to see NQ really expand towards the downside aggressively. Stop can be trailed to the 930 open price because ES has reached that 930 open price and NQ should never reach that 930 open price again. This gap is a breakaway gap. Now, because we traded below the low of the previous cycle from 830 to 10, I'm paying attention to this down close candle right here and monitoring direction to that. ES is also now trading aggressively below the 930 open price. I never want to see ES displace above the 930 open price again now. We have reached this BC right here, which formed in close proximity to that low. And that is what we're currently reacting of, as you can see. This is a rather aggressive reaction. So I'm very curious to see if this is a low formation here or if we're going to in fact continue lower. Like I outlined, my validation for this idea is this gap right here. I don't want to see the market trade into that gap and trade back into the 930 open price. I really don't want to see ES displays higher because of that cracking correlation relative to that previous cycle low right here. The fact that we are not using this down close candle as resistance price is a warning sign to me. It's not something I'm a fan of seeing. Pay attention to this candle's high. If it's going to remain intact, yes or no. ES traded above that high whilst NQ hasn't. $10.30 is near. Alright, NQ also traded above the high. The final line of defense at this stage is this upclose candle as I outlined, but I don't want to see the market trade into that 9.30 open price again. So I'm waiting to see how they're going to deliver from 10.29 to 10.30. There's 1 minute. And there it seems like my trailing stop is getting reached. With that, this lecture comes to an end. I hope that you found this insightful. The majority of the position was taking off around that 9.30 open price or below it. So I'm very happy with that. Is it possible that they're going to continue lower? Yes, absolutely. But I'm not happy with the reaction of this discount imbalance right here. The displacement above this downclose candle. And of course the displacement above this high. Those are all warning signs to me. And therefore I'm going to walk away now and leave the session for what it is. Want to wish you all the best and be safe.